I want to formally introduce Jay Springman, who is one of our product managers within the specialty metals category. We're specifically bringing him on today to talk about brass and red metals, so brass, copper, things like that, things that I don't normally cover, and I know that a lot of our customers and colleagues want to hear about. So without further ado, Jay, we're going to kick it over to you.
Hey, Nick. Hey, Mike. Appreciate the opportunity and the forum to talk a little bit about our red metals product group, and I wanted to kind of jump in here and maybe make a few comments as it relates to red metal demand, talk a little bit about mill overview and some of the end use markets that we're seeing some true optimism in as we get into the new year. So, I'll start by looking back a little bit, and we'll take it back maybe 6 months, the back half of last year. And I think, similar to other product groups and commodities, I think we started to see a bit of correction, maybe some softening in end user markets, certain end user markets, but definitely a correction in copper values the last 6 months of 2022. And I've got another slide I'll show you later that paints a picture to that. But in general, I think across our red metal product group, demand levels have been pretty good. Most of our major mill sources have seemed to untangle themselves a bit from what was a COVID disruption. As you pointed out, Nick, I think there's still some concern out there from the labor side and the availability to labor, but most of our vendors have improved efficiency in production over the last year or so, and we're not seeing the amount of allocations or constraints in the red metal market that existed a year or so back. And I also think most mills that I'm engaged with and talking with believe that there's going to be continued strength in demand and pricing through the balance of this year and hopefully into the future as well. I still see a lot of investments being made domestically on production capabilities, increased capacities from our vendors on the red metal side. I think one good example of that is Revere Copper. They're one of the largest domestic producers of copper sheet, plate, coil, and bar products here in the U.S. They've recently made some big capital investments in additional equipment, production lines, melting capacity that ultimately, and this started back, towards the middle part of last year, but ultimately that's going to bring another, let's say 30 million pounds of copper bar capacity into the U.S. by probably the later part of this year. The Wheeling Group is another vendor of ours that is a leading supplier really globally in copper-based products. And they've also continued to invest domestically. I've seen a few announcements of expansion of casting capabilities to enhance, certain areas of their rolled products divisions and groups here in the U.S. And I think if you think about it, Revere and Wheeling, these big vendors, they're making these investments because there's a lot of optimism towards in-use demand as it relates to red metal, the major markets tied to red metal. And it's the major markets that we're all hearing about, right? It's electric vehicles, it's auto, charging stations, data storage, you got renewable energy and infrastructure that we've seen in the headlines recently. All of those are big consumers in the red metal market and really are expected to see some continued growth. And I think many of the analysts, as I mentioned, continue to promote electric vehicles as a huge growth potential for copper and red metal products in the world. Don't know exactly where it's at today, but if I had to peg it, I'd say EV today makes up probably less than 10% of the market. But many of the analysts out there are pushing, projections maybe that it becomes 20, 30% of the market before it's all said and done. And as we move into the future. So I think even if it hits a portion of that, that's going to be extremely impactful, short and probably long-term to the world of supply and demand as it relates to copper, as it relates to red metals. So in general, I think the world is pushing to electrify more. EV is going to require more charging stations. Those charging stations are going to take connectors and switches to come aboard. Another big market that we've seen is data storage, the cloud technology, e-commerce. That's caused a bit of a building boom recently, and those data centers that are being built are also a large, consumer of copper-based alloys in those buildings. And then lastly, renewable energy infrastructure, and you've got this, this camp that sees the need to rebuild or create a new grid to handle what is potentially coming, from the red metal and in the world electrifying. So I think, the current administration continues to make investments there, and I think it should have a positive impact for red metal demand, hopefully well into the future.
Hey Jay, a quick question.
Yeah.
Is there any concern about supplies worldwide, mining, anything like that, in terms of the supply we have of copper? I think, Nick, you've talked about this in the past, kind of some of the reserves there. Is there any threat to kind of the global supply right now?
Yeah, I think, and I guess I'd say upstream, I don't get too far into the mining side of it, but certainly I think there's been some unrest in certain parts of the world that's disrupted, the mining part of copper, and as a whole, the supply short term, it's small, right? So I do see this rush from the vendor base domestically and also from the foreign side to somewhat of a race to be able to create and invest in enough, invest enough capital to create more capacity. So, long-winded answer, but yeah, I do see that in the market today. And I think Nick's going to hit a little bit further with that after my portion is done here. But yeah, there's certainly some concern out there from the supply side of copper as it relates to global demand.
Well, Jay, this is kind of timely. This is more of a comment than a question, but just yesterday, Tesla had their investor day, and on the investor day, I'm paraphrasing a little bit, but one of the things they touched on, and it's long-term, but one of the things they touched on was they're hoping to have a lesser and lesser reliance long-term on the rare earth metals market. One of the reasons why is because I believe, I'm reading between the lines, one of the reasons I believe why is because China has such a cornering of the rare earth market that they, Tesla is wanting a little more flexibility on supply chains and things like that. The belief in the market, at least the quick knee-jerk reaction to that comment is, well, if you're moving away from rare earth metals, you're going to have to move more into things like red metals, copper, aluminum, iron ore, things like that. So would incrementally create a bigger demand boom for these types of metals.
Sure, interesting. Yeah, so from a mill standpoint and looking at lead times, from my perspective, we've come to a much better spot. We've continued to see improvement on the majority of the product groups that we support on the red metal side. If you look at copper-based alloys, tied to coil and sheet products domestically, we're back into that 8 to 10 week lead time range. Plates stretched out a little bit longer, maybe 10 to 12 weeks. And then on the foreign side, which we do dabble in and have some avenues from a sourcing perspective, we see coil and sheet probably in that 15 to 20 week range, based on the logistical avenues that we have to overcome there at times. And then on the long product side, which is a big strength of ours as well, one particular group is brass rod. We've seen that come in significantly from a lead time. They're probably 2 to 3 weeks from our main domestic partners right now. And then if you look back on the copper long product side, the 100 series, the copper bus bar, although there is some tightness there, I think overall the efficiencies have come back around. We're seeing lead times in bus bar and 100 series probably in that 6 to 8 week range.
So Jay, I guess
yeah.
For our customers, are there any categories where you're seeing the opposite, where you're seeing maybe some supply issues, where maybe they should keep a more hefty supply inventory, if you will?
Sure. Yeah, so I mentioned it briefly, but on the copper bar side, I mean, bus bar, it is tighter than the group as a whole. And I think domestically, you've got just a couple large producers with Revere and Hussey. I mentioned the upgrades that Revere is going through. I think some of those upgrades are hampering some of the capacity that they can push out into the market today. Another area I think of tightness on the copper side is copper bar, round bar. So if you look at the domestic market, small diameter really isn't available. It's much more of a foreign produced product. So that has some tightness in it, as well as the larger diameter of copper rounds. Anything above, say, 2 inch, that's historically been tied to foreign sourcing, and I think has remained a little bit tighter even coming out of COVID. So on the price side, I think there's still a few drivers that we continue to watch and that remain impactful. Nick, you mentioned a couple of them. China continues to be in the headlines. They appear to be coming out of their they're locked down, and as they are with many other commodities and metals, they're certainly a huge producer and a huge consumer of copper-based products. If they fully normalize, I think that certainly will impact the world of supply and demand, and ultimately, impact cost. Energy has certainly been influential to red metals over the last several years. I think that continues. Europe, the world operating at higher energy costs, and because of that, we've seen many of our large vendors applying additional energy surcharges to their cost structure. We always continue to keep a pulse on freight. I think typically over the last month or so, we've seen that recess a little bit, and it's gotten better, but if it starts to elevate again, certainly that could be impactful to cost. And then lastly, the conversion or the fab side, the actual cost of making the material that we purchase, that has been in an elevated position based on a lot of the supply demand dynamics that are out there. I foresee that continuing, maybe it bumping a little higher as we work through, the balance of this year. So in general, lead times are coming in. I think they're getting a little bit better. Mills are untangling themselves. There is a lot of expected optimism or expected demand as we look at in-use markets like EV. So I think all of those are likely to continue to impact red metal value, copper values. And Nick, if you could go to the next slide, I just wanted to paint a picture of the copper side of things. And this is really a snapshot through about the last 15 years of the COMEX index, which tracks the value of copper here domestically. A lot of our suppliers peg their costs against COMEX values. And really what I'll point out is number one, copper is and probably will remain a pretty volatile commodity. But if you look at the right side of the graph, you can see what happened during, that pandemic timeframe through 2020. We saw a pretty sharp trend line upward, and even continued to be at high levels through 2021 until really about the first quarter of 2022. And then at that point is really where that correction started to happen. And what I mentioned, we saw that fall towards the back half of 2022. But as the world kind of adjusted, as China came, out of this lockdown, as we look at the supply and demand dynamics, we've seen metal values or the value of copper start to push upward again. And I think as of today, the COMEX sits somewhere in the area of about $4.10 a pound. And historically, again, 15 years here, that's at a pretty high level. And I think the general consensus that I'm hearing from our vendors is that they expect it to remain there. So
it looks consistent with the theme that we're seeing across things like carbon and nickel and aluminum, where, if that is in fact the trough that we're going to see through this cycle, it's certainly a higher trough than where we've seen in the past. So maybe that's just inflation feeding through to higher cost of everything.
For sure. So last slide, maybe last comment. The Red Metals Group, I don't know if it gets the spotlight within the Ryerson company that many of the other products do, but it's been a valuable product for us for a long time. I'm in the camp and a firm believer that the world is moving to electrify more, and hopefully we can do that, through our Red Metals Group, and happy to support any of our customer needs that are out there. So I appreciate the time.
Excellent. Thank you, Jay. And we're going to have you stick around for the very end in case there's any Q&A at the end of the rest of the cup of Joe. Jay will be around to answer those questions as well.
For sure. Thanks.
And while we're on the topic of copper, I just threw this in because I saw his commentary about electrifying the world. And I was listening to a podcast yesterday, which was hosted by Double Line Fund, which is a hedge fund, mostly fixed income manager, but they trade some commodities as well. And one of the things they were touching on was, and I quote, I've got the quote up there on the top, which is, in order to become clean, we may need to get dirty. And the notion of that comment was basically, there's very clearly an energy transition and maybe an automotive transition that's taking place where we're moving to differentiated sources of power, differentiated sorts of mobility. And a lot of those are, I think Jay touched on this fairly well, which is a lot of these things are going to be very, not just metals broadly intensive, but very copper intensive specifically. Wiring, generators, things like that, very mining intensive. And what I wanted to pull up was just a long-term chart. This is looking at COMEX, which Jay mentioned, the London Metal Exchange and the Shanghai Futures Exchange inventory levels. And when I look at this chart, we're certainly not at panic low levels, but we're low relative to where we've been over the last decade. But when I look at this chart and I put it up against this narrative that we're moving towards a green energy transition, and things are going to be more electrified, whether it's cars or wind farms. And then I look at the inventory chart, the two just don't seem to match up well to me, and Jay touched on a little bit, but there's going to need to be a massive amount of investment, not just within copper, but in metals generally, in order to get more metal out of the ground, recycle more metal, because the amount of inventory that we've got right now does not fit at all the demand forecasts that are out there for the next 5, 10, 15, 20 years. The two just don't really align. And the only way you really get those to align is either, more investment where you get more supplies, or, you get a much tighter, higher priced market, which then incentivizes more investment. So, I'll get off my high horse here on the investment side of things, but when I look at this picture and I see the amount of inventories of copper that are currently sitting on the exchanges, it doesn't really line up all that well to what I think is going to be needed to fit this electrification story.